Hello and welcome to Business Incorporated live on Channels Television. Here's what's coming up in the next 55 minutes. Reactions continue to trail the latest rate hike by the Monetary Policy Committee. Today we'll hear from the Monetary Policy Department on why. And Ethiopia plans to improve tax to GDP ratio, the government introducing new economic policies and legal frameworks in the proposed asset tax policy. Plus, data shows Kenya has become less open to visitors despite a visa-free policy. It's great to have you join us. I'm Ladi Williams. Let's get a quick check now on the commodities market. We see gold prices afflicted with a narrow range on today. That's for the midweek trade. That's in full gear as investors are awaiting key U.S. inflation data for insights into the potential scale of the Federal Reserve rate policy. That's for next month. Spot gold, $2,635 per ounce. It's unchanged this afternoon. U.S. gold futures, that's up 0.6% at $2,635 per ounce. Let's get a check on other metals that we track in this market. Now we see silver, that's down 0.1%, $30.39 per ounce. Platinum unchanged, just like gold. Then we see palladium, 0.4% down, $973, losing that $1,000 psychological level. All right, let's get a check on what's playing out with oil now. We see oil prices steadied in early trade today, with markets assessing the potential impact of a ceasefire deal between Israel and Hezbollah. And ahead of Sunday's OPEC Plus meeting, we see Brent crude futures still pressured there, 0.2%, $72.79 a barrel, and WTI crude still below the $70 psychological level at $68.73 a barrel, down 0.1%. So we're still seeing that week-on-week volatility with all markets up this week, down the next. To other stories now, Nigeria recorded 79% reduction in crude oil theft, as well as 15% decline in oil and gas revenue in the production volumes between 2022 and 2023. And that's according to the latest report from the Nigeria Extractive Industries Transparency Initiative. The agency made this known in Abuja when it launched a research on the impacts of energy transition on Nigeria's economy. NATI's Executive Secretary, Oji Egbonaya, explained that the progress made by Nigeria against oil theft reflects an improvement in resource management. He commended the Office of National Security Advisor and Nigerian Armed Forces and other security agencies for the decline in crude theft and called for sustained effort against the menace. And the Central Bank of Nigeria has announced fresh guidelines for interbank foreign exchange trading via its electronic foreign exchange matching system, EFMS, with effect from November 25th. The new directive issued by the financial markets regulator mandates a minimum tradable amount of $100,000 for all interbank forex transactions. CBN says the move is aimed at enhancing market transparency, ensuring efficient trading, and strengthening compliance with Nigeria's FX market. At the same time, the CBN says the FM's platform will be limited to spot FX transactions involving Nigerian naira and the United States dollar, but other currency pairs could be introduced in the future. And as Americans anticipate Thanksgiving celebration tomorrow, the U.S. Consul General, in collaboration with the American Business Council, at the Thanksgiving soiree in Lagos, celebrating ways the United States government, the U.S. companies, and NGOs advance social impact projects that improve the livelihoods and outcomes of people in Nigeria. Take a listen.
And tonight, we're celebrating with the American Business Council and so many of our partners across Nigeria, Thanksgiving, which is an American holiday where people come together with their families and loved ones and celebrate the incredible blessings of being together as a family and being here. So one of the things we've tried to do today is to celebrate all the work that is being done to help Nigeria by our companies, by the U.S. mission here in Nigeria. So we have things like Education USA, how the U.S. mission invests in the next generation of students in the United States. We have our network of 27 American spaces represented here. We have companies from across Nigeria, and wherever you see U.S. companies invested, you see them investing not just in business and trade, but investing in the people that they work with and the people that work for them, but also the communities where they work. So we're highlighting that today, not only to highlight it, but also to help each other know who's doing what, so we can work together and support each other, because we think it's so important to give back to the communities where we work. It's a wonderful, wonderful way to celebrate Thanksgiving.
All right, now let's get a check of what's playing out with global currencies. That's the global currency market. We see definitely there's been a lot of volatility. If you've been tracking the currency market, from a strong US dollar to some other currencies having to get weak, with most of the bullish news we have coming out from the US, from geopolitics, and also Trump's election win. So how are traders, that's Forex traders in the global market, navigating all of this? And joining me to discuss this, we have Michael Udo. He's Director of Operations at NAGA. Hello, Michael. I don't know if you can hear me. Michael, you might have to unmute. I think I see your mouth moving.
Yes, hold on.
Fantastic. I can hear you now. So it's great to have you, Michael. So I see a lot playing out in the global FX market. We've seen the impact, of the Trump trade. We've seen the DXY, that's a dollar index, that has hit a new high in a couple of weeks now, and we're still seeing strengthening when it comes to the US dollar. So talk to me about how, Forex traders are navigating, all that's playing out in the global FX market.
All right, so basically for Forex traders, every time we have a strong dollar, obviously, right, it's a time to trade, take advantage of those moves as well. So for all the Forex traders out there, it's a key time to look at charts, analyzing, see what direction this is really playing out. With the new president-elect in the US, there's a lot of expectation, a lot of anticipation, around the US dollars, basically. And then this spike you're seeing around, it's correlated with all the expectations, from after the elections, basically.
And looking at other currencies, that are trading against the US dollar, do you continue to see weakness for these other currencies? Seeing that the dollar is still rallying at this point, we've seen some comments from Trump, and we've seen how that's impacted the peso at this time. So talk to me about how you're seeing other currencies against the US dollar.
So basically for traders, right, especially those who trade pairs with the USD, yes, US dollars, it's more like a benchmark, against every other currencies, right? So if the USD is growing in strength, obviously other currencies would compete around, this market, basically, especially with other commodities. Even when you look at it from even the oil side, all right, USD to a large extent is dictating as we speak right now.
And do you see the dollar?
If you look at,
okay, you can carry on. You can carry on.
Quickly, even if you take a look at the price of gold versus dollar, for instance, right? Sometime yesterday, and I think yesterday, you see a sharp drop in that momentum building back up again, and all of this. So like I said, the dollar is a dictating factor, right? So wherever the dollar goes, traders are looking and seeing how they can take advantage of the strength or weakness of other currencies, right? Or the strength of or the weakness of the dollar and vice versa. So as a Forex trader, what we're looking at on a day-to-day basis, sit down, looking at our charts, looking at news, looking at different factors that is either driving the value of dollar upward or downwards, or other currencies, basically.
And what currencies would you say it's time to go short on, if you're trading the FX market, and which ones do you think we should be bullish on at this time getting to January?
Getting to January, there's a lot of anticipation on the USD and even BTC as well, So a lot of us, personally for me right now, as we speak, I'm on a trade right now, looking at gold buying to a level from where it dropped to, because it's tracing back up at the moment, right? So right now, with Trump in the picture, there's a lot of expectation built around the USD, all right? So that's what we're looking at. And then towards December, it's a time where different speculations will happen. So I'm careful. I don't want to give any go-to-market signal right now on this call. And then if it doesn't play out that way, people feel like, oh, maybe the basis for why I took this decision was because, I took these directives from Michael, right? The market is a place that you can't sit and speculate 100%. You understand that there are different variables that would determine or change the direction tomorrow, all right? But basically right now, a strong US dollar is what we're saying.
All right, and I'm sure you also, trade currencies on the African continent. What are you expecting for, currencies in Africa, like the naira, and looking at the Kenyan shilling and other major currencies on the African continent?
All right, so let's take a look at naira, for instance. I think naira over the last couple of weeks, it looks like it beginning to lose that strength again. All right, at some point there was some recovery, and then we're positive that we're going to get some favorable naira at some point. But from the look of things, I think today, I think naira currently sits at 1,700 plus to a dollar, right? So hopefully, from a patriotic point of view, we hope that naira gains what's it called now, strength over the next couple of weeks. Otherwise, maybe a $2,000 a dollar is what we're looking at.
And what you're seeing, so far in the FX markets in Nigeria, when you look at policies, you see yesterday we got an interest rate hike from the MPC, about 25 basis points. When you see what's playing out with fuel prices, rising cost of living, what is it telling you, about the naira and the trade to take, going forward?
Right, so generally speaking, right, I think there's a lot of pressure on the naira, I would say, because the way it's losing value. So I think some people are then beginning to say, okay, should we save USD instead of saving the naira? All right. Now, policies like what the central bank is doing now and every other body language from the government, people are watching. Do you understand? Now, I think the government, to a large extent, need to sit back and look at how we can, obviously, the only way we can give some sort of strength to naira is when we begin to rely more on naira, spend naira, buy more Nigerian products than buying dollars. Because the more we buy dollars, that puts so much pressure even on our our naira. There's this story about the local refinery, Dangote refinery coming up, and there was some sort of excitement around the corner, praying that we're not going to be spending so much USD purchasing fuel and all these things again. But all of those speculations are still around, and the more we encourage the use of naira, maybe we can get some strength. But right now, dollar is strengthening over the naira, obviously, from what we can see.
And we definitely hope the policy direction, gives most of the traders out there the imperative to actually go bullish on the naira. Definitely hoping for that. But thank you so much. That was Michael Udo, Director Operations at NAGA, giving us what to expect there for the global FX market. Thank you.
All right, thank you.
All right, there you have it, because it's currency wars this time. If you check out what's playing out in most of those markets, we see the dollar index. It's had quite a rally at this point, almost getting that rally that we saw at the time Russia invaded Ukraine. We saw the dollar had an incredible run that time, and we're seeing that play out this time. But it's now about politics right there in the U.S. with the Trump trade. And most of what we're hearing from the Trump camp, they're boosting the power of the U.S. Dollar. All right, we're going to go to our next conversation now. And definitely when the interest rates are high, definitely businesses are going to have to restructure or find ways to navigate high interest rate environment. But how can businesses also balance profitability and also trying to be there for the customer and to attract new customers and to retain customers? Joining us to discuss this, we have Abdul Sabir Loko is a business analyst joining me via Zoom. Great to have you on the show.
Hi, Laddie. Thanks for having me here. Can you hear me?
Yeah, I can hear you loud and clear. So definitely quite tough times for businesses and households alike in Nigeria. Talk to me about how you're seeing businesses adapt. Are you seeing more digital transformation, for Nigerian businesses so far?
Okay, Laddie, first of all, I would like to talk about digital transformation. What exactly is digital transformation? It's simply, in layman's language, business is trying to overhaul their processes just to, by leveraging technology, improve customer services, ensure shareholders' values are increased, increase profitability and the rest like that. This can be accomplished by using, by streamlining processes, ensuring that customer service is being done properly, and at the same time, trying to at the same time streamline the efficiencies, like I said. So, coming back to the question you asked me about digital transformation in Nigeria businesses, it is very vital for businesses to understand to understand the sorry, excuse me, 1 second. Yes, apologies for that.
All right, so talk to me about how Nigeria's digital transformation landscape. How does that compare to other African countries?
With Lagos now being the key front runner in this particular industry, we have other competitors like Kenya and Egypt. Although being the African giant as we are in Nigeria, we still have some challenges with the electricity and other things that you are aware of right now.
And what are the key drivers of digital transformation, in Nigeria, and how can businesses leverage these drivers, in your opinion?
The key drivers I can actually point to right now, we are looking at the youth, the young populations that are actually tech savvy. There's this high demand of technical products digital products in Nigeria, and this can be a result of the youth, and also the fact that the government at this point is stepping in. They are trying to use there's this initiative called the 3M Tech, trying to train about 3 million Nigerians with the digital skills that is available, that are required to do this digital transformation that we're talking about here.
And also, going forward, we have festivities coming up, and Black Friday this week, and we know businesses would like to give some juicy offers to most of the customers at this time. What are you expecting?
Yeah, we are based on the research and based on past experience. We are expecting huge customers to actually come on board and partake in this Black Friday offerings that companies are offering right now. This actually is supposed to improve sales of organizations that especially the e-commerce especially companies in the e-commerce sector. You get they're actually looking up to this point to actually improve sales. E-commerce sectors like Konga and the rest like that are putting on mouth-watering discounts, just to ensure that they facilitate and improve and take advantage of these opportunities.
I hope it's going to be a win-win situation for businesses and households.
Definitely.
For this festivities. Well, thank you so much, Abdul Sabir Loko, as a business analyst. Thank you so much for joining us today.
Thank you very much.
All right, we'll take a break now. When we come back, we head straight to the markets, and we'll also talk about what to expect for monetary policy. That's in a moment. Just stay with us. Alrighty then. So yeah, yesterday we got that 25 basis points hike. Some have described it as quite dovish, while we had some expectations about 50 basis points. Some recommended a hold. Well, let's talk to Dr. Ladi Bala Kefi now, MNI. She's Acting Director, Monetary Policy Department at the Central Bank of Nigeria, joining me from our Abuja studio. Great to have you.
Good afternoon. Ladi.
Good afternoon. Great to have you. So we know most economists polled by Bloomberg, they expected a 50 basis points hike. Why was this a dovish hike?
Yes, I believe you want to know the reasons why the MPC members increased MPR rate just by 25 basis points, and it's largely due to we looked at the MPC members wanted to give time for the past hikes to start taking effect. Because, you know, between the time that you raise rates and the time that you start seeing the impact, there is usually a lag period. In Nigeria, from the studies we have undertaken in the bank, the results we got is that it would take about 150 days, 3 to 6 months or thereabout, for us to see the effect of our monetary policy transmission. So we have been hiking consistently. So we thought, let's take a slightly dovish stance to see the overall impact as we move forward at the appropriate time. And also, the MPC members were also mindful of the current economic environment in the country, the macroeconomic fundamentals, and the welfare of citizens. If you see in the communique, that was mentioned clearly in the first paragraph of the communique, whereby the chairman of the MPC committee, Mr. Olayemi Kadoso, the governor of the Central Bank of Nigeria, mentioned that the welfare of citizens and the income of Nigerians was the bank is very mindful of that. So with that in mind, that's why that stance was taken, basically.
All right, so with this 25 basis points hike, would you say the MPC still have more wiggle room to raise rates further if inflation still stays stubbornly high?
Oh, yes, absolutely. The commitment of the MPC members to ensuring that inflation trends downwards is unwavered. They are committed to ensuring that price stability, which is having a sustainable inflation rate that will be commensurate to growth and sustainable economic growth. And in view of that, the members of the committee will do whatever it takes to ensure that inflation is reined in. So if we continue seeing the conditions like excess liquidity in the system or heightened increase in currency outside circulation, they will do the needful. They will take the necessary action that they required to ensure that inflation is reined in. Because having high inflation is very inimical to the economy. It will affect all cadres, not only people at the lower echelon, even the middle class, and even the higher class. Everybody will be affected. So the monster in the room is inflation. In that regard, whatever the MPC members and the management of the central bank would do to ensure that inflation is reined in, they will do it. If it is a hike, it would happen. But we go by numbers, we go by empirical evidence available to us, we go by data, and this was the last MPC for the year. Hopefully, in January, we will also monitor the situation, and as usual, based on empirical evidence in front of the management, which the team in the central bank will present to them, they will take a decision whether to cut or to hike. If there is need to hike, they would hike. Whatever it takes to bring down inflation, that is the path that the MPC members would take.
All right, thank you so much for that. But I'm going to come back to you. I'm going to take a quick break now. When we come back, we're going to dive into what to expect for monetary policy. I'm still going to have with me Dr. Ladi Balakefi. We'll take a quick break now. Just stay with us. Welcome back, and we're still talking monetary policy, and I still have with me Dr. Ladi Balakefi, MNI. She's an acting director, Monetary Policy Department at the Central Bank of Nigeria. Thank you for staying on. And, definitely, we've heard from economists and a couple of experts in Nigeria saying that Nigerian businesses can't take another hike, that this time they're bleeding, at this point. So how is the Monetary Policy Department and the committee looking to balance this trade-off between growth and tackling inflation going into 2025?
Thank you for that question. You see, I think when your opening statement, you did mention that central banks, if you look at the global picture, central banks in advanced economies are cutting rates. But if you look at the period in which they hiked rates until they reached a comfortable level, you will understand that the central bank, we haven't even done anything yet. The advanced economies like the US, the UK, the ECB, they kept their rates high. They kept on hiking for several months. For example, I think is it the United States hiked for the UK or hiked for 17 months. It took a while before they started cutting rates until they were comfortable. Every central bank monitors macroeconomic fundamentals, and based on that, they will take a decision if it is necessary for them to trade off growth, to rein in inflation, or to pursue growth and allow inflation to go haywire. Moderating both at the same time can be very tricky and is quite difficult. But if you look at where the Central Bank of Nigeria was coming from, we had excess liquidity in the system. We had ways and means of over 30 trillion, which some of these amounts are still out there in the system. So already the backlog inherited was quite enormous. So trying to rein in inflation now, we had to do based on the evidence in front of the MPC committee. The decision to whether to hike and now focus on reining in inflation was taken. Now, to let you know some quick wins that we've had as a result of the hike. And these quick wins will be things that will eventually stabilize the economy in the medium to long term. For example, since this management of the Central Bank and the MPC committee took over, we have witnessed enormous inflows into the economy. If you look at from inflows increased to 8.42 billion in September 2024 from 5.72 billion in August 2024. And that is remarkable. And I'll even tell you quickly that a single individual in the diaspora, due to the active drive for diaspora remittances into the country, and for the credibility that the current management and MPC team have introduced, the transparency with the data constantly and consistently, people are beginning to have more confidence in the economy. Foreign investors are beginning to have more confidence in the economy, and thereby we are getting more inflows, foreign exchange into the country. One individual brought in over $1 billion into the economy between September and October. One individual. We got an inflow to that quantum. And currently, the reserves stood at just over 40 billion as at in October 2024. And this was largely due to the positive impact of the bank's remittances policy. The bank has introduced IMTOs, and aside from that, the management of the bank itself has gone on intense drive to attract inflows, especially that of Nigerians in the diaspora. The central bank partnered with the NIBS, Nigerian Interbank Settlement System, and meetings were held, stakeholders meetings, town hall meetings were held in targeted states in the United States, such as Houston and DC, on the side of the IMF World Bank annual meetings. And we started seeing the results. Following the end of the annual meetings, we have received up to 0.34 billion, largely due to the aggressive drive of the management to attract remittances. And this has brought relative stability to the exchange rate, which was otherwise volatile before.
Okay.
So we have recorded tremendous successes. The current account balance has recorded a higher surplus. We've recorded even growth. There is an uptick in growth. If you look at the figure from the National Bureau of Statistics, you will see that growth has increased. The overall BOP, balance of payment, in Q3 recorded a surplus of $3.79 billion compared with a surplus of $2.47 billion in Q2. So all these are, and there's been an improvement in the external reserves. Now we have about 13 months of import cover of reserves. So we have been recording some successes, and that can answer your question to why we took a slightly dovish stance. I wouldn't say the stance was dovish, because you can see we didn't cut the other indicators. It was just the MPR. Yeah. Thank you.
Okay, thank you for that, and bringing us up to speed on some of the wins there from the management, and thank you for bringing back the data publications too. We've been seeing the CBN PMI data, and thank you. That's really helped our reporting, so far. But seeing that inflationary pressures mostly caused by rising energy costs and food prices, how's the monetary policy seeing the issues of high PMS prices and the whole drama with Nigeria refining its own oil and Nigerians begging for lower PMS prices? How are you looking at all of that?
Thank you for that question. Actually, if you look at the cause of this inflation, you will see that core inflation has been consistently going up and driven mostly by cost of energy. And this can largely be attributed to the continuous hikes in the PMS price. And this is really distorting effective transmission of our monetary policy. We need to understand that the monetary policy cannot address all the issues. Monetary policy alone cannot even tame inflation, because there are structural issues in the economy. Food is a major component of the inflation basket in Nigeria. And food prices have been going up. This can be attributed to a lot of structural issues, which includes insecurity in the country. Although we know that the federal government has recorded intense, and the Nigerian military, they've recorded intense gains in that space, as we can see that the the banditry efforts have been curtailed. Nevertheless, it still has some impact on food production because the areas where these events occur are predominantly the food producing area in the northeast and the northwest of the country. So once insecurity can be tackled absolutely, we will see changes. It has affected production of food and even legitimate export of food. Why I'm saying legitimate is because there's been a lot of smuggling. We have from processing natural language on the social media and from gathering information through surveys, we've discovered that the middlemen activities are quite in the increase, and they distort the whole stability of food prices. There's hoarding of grains in some areas, and all these are contributing to inflationary pressures. And these are things that monetary tools cannot address. We can only collaborate with the fiscal authorities, and that collaboration, we've been strengthening it. And it so happens that the permanent secretary is on the MPC committee. So we also have committees where we meet to address these issues. There's been some, for example, I believe farm produce recorded some gains, and that can largely be attributed to the efforts of the federal government, because the federal government, they've been putting security, ensuring that there's security in these areas, and also distribution of fertilizer. If you can remember some time back, indeed, the central bank donated fertilizer to the federal government just to play our own role in trying to ensure that the agri sector, which is very critical to the inflation basket, is stable.
All right, thank you so much. And definitely we hope most of these rates come down by 2025, and also that inflation, stubborn high inflation, also comes down too. Thank you so much, Dr. Ladi Bala-Kefi. He's Acting Director, Monetary Policy Department at the Central Bank of Nigeria. Thank you so much for coming on today.
Yes, just to have a last word, I'd like to reassure the audience that the management of the Central Bank of Nigeria, as well as the members of the MPC, are committed to reining in inflation and ensuring price stability, and they will do whatever it takes to ensure that this inflation is reined in. And they are also, the governor is very passionate about financial inclusion. And if I'm sure as you're in the media, you know that there was a financial inclusion conference sometime last month, this month actually, just a couple of weeks back, where we launched the WIFI for women economic empowerment,
right,
poverty alleviation. Yes. So please, just the take home here is that the Central Bank of Nigeria is mindful of the current economic situation and the role that inflation plays, and are ready to take whatever steps to rein that in. Thank you very much.
Thank you so much for the assurance. Thank you so much for coming on today. All righty, now let's head straight to the markets. I know we're pressed for time at this point, but let's have Anita now to give us what's playing out for most of the markets that we track. Good to have you, Anita. You can have the floor.
Okay, afternoon, Ladi. I think since I have just about 5 minutes, so let's be much brief on the analysis. Okay, so let's take a look at the markets at intraday. Yesterday we saw the local markets, that's the Nigerian Stock Exchange, being in the green, but that was just by a tad 0.01%, and that translates to about a 8.25 billion naira gain. But at intraday, it was down by 0.32%, and that brings the year-to-date to a plus 30.58%, while month-to-date is unchanged at 0.00%. While the Johannesburg Stock Exchange, 0.16% down at intraday. For the other two markets on the African continent, they're also down. So most of the markets across the African continent were bleeding at intraday. But then we'll look out for how that number would pan out for the close of midweek trading session. And now let's talk about the impact of the Monetary Policy Committee's latest rate hike, which is the 6th under Governor Yemi Cardoso, and then, of course, the number 14th. So far, the interest rate it started from that tightening cycle, which was at about 13% in May 2022, and has risen by about 71.6% to 27.5%, which is just what was announced yesterday by the Monetary Policy Committee in its efforts to tame inflation. And of course, that impact the organized private sector, such as the Nigeria Employers Consultative Association, NECA, the Manufacturers Association of Nigeria, Lagos Chamber of Commerce and Industry, and the Center for the Promotion of Private Enterprise have also said that this impact has not been felt. Inflation has been rising. Nigeria's inflation, the last count that we had was 33.88%. So far, has this been working? But the central bank governor has said that, well, there's no cause for alarm, that by sometime next year, the results will be felt and inflation will come in lower, as well as the interest rate would be allowed to come down to at least to an affordable level for the Nigerian economy, and then also spur growth. But so far, when we talk about the fixed income market, we saw that the Treasury bills market yesterday, it was bearish. The markets, all the participants there were quiet, and they were all anticipating the outcome of the Central Bank's Monetary Policy Committee, which we saw yesterday, that slightly hawkish stance, which came in line with market expectations, 0.25%, although some were thinking it will be 0.50%, but that 0.25% increase is what we saw for the last Monetary Policy Committee meeting. And then the next stop will be in January, sometime January, towards the tail end of January. That's when the central bank will be making the next announcement, and that will come after the the inflation number, as well as the other factors that the market has been considering. So far, this is what the number for the October inflation, which is when you compare it with September, it was up from the 32.7% which we had in September. It closed to this amount, 33.88%, and that was all largely contributed by the food inflation as well as the core inflation. All of the indices here were upwards, they were trending upwards, and of course we also expect that November inflation, which will be out sometime next month, as well as the December inflation report, which will be out sometime in January of next year, they're all expected to be pointing higher. But of course, we'll just need to wait for that to come. But now let's talk to Caleb Alimi, who is the chief dealer at Providence Bank, to give us details about the transaction that we saw yesterday and the impact that it had across the currencies market. Thank you for joining us, Caleb.
Thank you for having me, Anita. Good morning. Good afternoon, sorry.
Yeah. Good afternoon. We are in Lagos, Nigeria, and it's actually afternoon. Now, can you tell us this impact? How did investors there react to it, apart from the cautious trading? But for today at intraday, what's the reaction like?
The reaction on the market firstly takes off from the impact on liquidity. Yesterday, the market was down about 300 billion, and today market is down a little over 400 billion. So the first impact is that the central bank has continued to adopt a contractionary or a hawkish monetary policy approach, which the central bank governor reiterated yesterday. So we're seeing that in the tightening situation of liquidity. So liquidity remains very, very tight. It's worsening day on day. Also, the fact that the interbank lending rates among banks has also inched up by 25 basis points, which was from 32.25 to 32.5, and banks have continued to trade around that level. That has been the immediate impact of the hike in monetary policy rates, the fact that banks are borrowing from themselves at a more expensive rate.
Okay, Caleb, I think we'll leave it there. Of course, we hope that this latest hike by the central bank would ease inflation, at least in the next couple of months to come. Thank you so much for your analysis on the show. Okay. So that was Caleb Alimi, the chief dealer with Providence Bank, for the market numbers at intraday. Okay, so now let's talk about the U.S. markets. The stock futures, they slip as investors are waiting the Fed's key gauge for inflation, which is the personal consumption expenditure price index, which is set to be released anytime from now. So ahead of that, the market, the Dow Jones Industrial Average, the three averages here, the Dow Jones Industrial Average, S&P 500, and as well as the NASDAQ, they were all in the red. So they're all anticipating that number is going to come in. They expect expect a year-on-year increase of about 2.8%. That's for the core reading, which excludes food and energy. So, Ladi, that's
so
it
much to
for
unpack
numbers.
there. Thank you so much, Anita, for giving us those details. All right, let's take it on to London now, see what's playing out. Great to have you, Juliana. So we see the Vauxhall owner. That's they're about to close that Luton factory there. We got that headline earlier today. Can you tell us more about that?
Yeah, good afternoon, Laddie. This was announced yesterday, and quite a shocking announcement because those who live within the Luton community, which is just an area north of London, they're a trucking town. I think the Stellantis owned Vauxhall plant has been there since 1905, so it's over 100 years. So this is devastating news for them. In fact, Prime Minister's Questions is ongoing at the moment, and Sir Keir Starmer, the Prime Minister, is facing lots of questions about this because one of the reasons why Stellantis have decided to close the plant is because of what they described really stringent new rules surrounding electric vehicles. These were brought in by the previous government, the Conservative government under Boris Johnson, because of the push to, have clean energy. There was a blanket ban on the sale of new petrol and diesel cars by 2030. Rishi Sunak then extended that to 2035, but it's been put back to 2030 by the Labour government. And Stellantis have said that it will just make building new cars, petrol and diesel cars, just unnecessary and unaffordable. So there are currently 1,100 jobs at risk. I suppose the only good thing about this is that Stellantis said they will work closely with government and unions to ensure that perhaps there can be a transition from the London Luton port to Ellesmere, which is in Cheshire, quite a while away, but still quite close. They've just received a £50 million investment injection to make the plant an electric vehicle making car plant, which is good. So yeah, really devastating news. Yet again, we're seeing more job losses in the UK, but hopefully some of those jobs will be saved.
All right, but I also heard Just Eat, they're planning to delist from London Stock Exchange. How's that playing out with the markets too?
Yeah, that's right. Just Eat, takeaway.com are going to be delisting from the London Stock Exchange, I think from Christmas Eve. Quite shocking story, actually. They've had a series of pretty difficult news. I think it was only a couple of weeks ago we were discussing that they sold their North America subsidiary Grubhub for £650 million to Wonder Group, $650 million to Wonder Group. They actually bought it for over $7 billion. So you can imagine the losses that they faced there. And then they have decided that it's just no longer profitable for them to be listing in dual markets because they're also on Euronext in Amsterdam. They are a Dutch-based company, but they've been trading in the UK for at least 10 years. And of course, 10 years ago, food delivery services were the happening thing, but consumer habits have changed since we emerged out of lockdown, and Just Eat Takeaway seem to be a victim of consumer changing habits. However, they are, of course, a Dutch-based firm. They are still going to be listed in Amsterdam, but it just goes to show that we're all changing our habits, and some businesses won't survive.
Juliana, always great having you to give us what's happening and playing out right there in the UK. Thank you. All right, to other matters now, see the Ethiopian government now. We see in recent years, Africa has emerged as a promising destination for medical tourism with an increasing number of international patients seeking high-quality, cost-effective healthcare services on the continent. With the launch of the Roha Medical Campus in Ethiopia, let's get a sense of the possibilities so far. Join us for this conversation. We have Sydney Bell, Director of Roha Medical Campus, joining me via Zoom. Great to have you on the show.
Thank you. Happy to be here.
All right. So tell me, what does it mean, for the Roha Medical Campus to be the first green accredited hospital in Ethiopia? I heard that, happened recently.
It is a huge accomplishment for us. We plan to deliver high quality care without compromising the environment. And receiving the ED certificate by IFC to be the first one in Ethiopia to do it is a testament to our plan for high quality services while also delivering sustainability goals that will impact this generation and generations to come.
And can you explain the key sustainable, design elements, of this hospital? Because I know some other African countries would like to also, glean from, how you guys have been able to manage this.
Yeah, I mean, it has not been easy, but we've been committed from the beginning. So we have integrated a thermally activated heating and cooling system, which sits in the floors of our building. We are planning to have solar power generation with battery storage sitting on the rooftop of our building. We have implemented water-saving plumbing technology solutions. We have a high-powered facade design that reduces energy consumption. And of course, we have clean technology powered advanced waste management. So it has been collaboration between our team here, our civil engineers, and our consultants to make this happen.
If a country like, Nigeria and some other African countries struggling with high energy costs, and we see the hospitals are not insulated from that. So talk to me about the Milwaukee Forest and other green features, present on the campus.
Yeah, I'm happy you mentioned the cost of operation of Milwaukee Forest. So we truly believe that placing the environment first is not only a wise decision for generations in the future, but also for operational costs. It allows us to offer affordable care when we integrate these sustainable choices. And in addition to what I mentioned, the green features, we have a Milwaukee Forest, which incorporates 12,000 endemic trees in Ethiopia. It lowers our noise pollution, and it also creates a healing environment for our patients. And of course, it will contribute to our carbon zero goals by capturing carbon emissions in the environment. So it is truly a 360 approach we've taken to the environment at our hospital.
Right, and with what you've seen so far, and if we imagine that other African countries, follow the footsteps with green energy with this hospital, what are you seeing for the future of medical tourism to Africa?
Yeah, it's a big deal for us. I mean, the medical tourism business is estimated to be $5 billion in the continent. And as you know, we're competing against other markets that are desperate to deliver the advanced services that are not readily available in Africa. So by, positioning ourselves in Addis, where we are automatically a transit hub thanks to Ethiopian Airlines, and by offering affordable care, we believe that we can reduce outbound medical tourism in Africa and keep patients here who need those advanced services that are not currently available.
All right, thank you so much. That was Sydney Bell, Director, Roha Medical Campus. Great having your perspective today. Thank you.
Thank you. Nice to be here.
All righty then. Let's get a quick check on what's playing out in the crypto market. We see that pullback that started recently. That's with Bitcoin. That has continued after not crossing the 100,000 level. But we're seeing a bounce right there in the market now. 0.35%. Bitcoin trying to get back up, $93,589, and mostly green at this point. So we see that bounce in the market, taking the whole market up at this time. So that's how most of the markets we track are looking today. That's for the midweek trading session. We have tomorrow again to give you feedback on what's playing out in these markets. But for the U.S., it's Thanksgiving holiday. Well, thank you so much for watching today. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.